Hello, everyone. Welcome to another episode of Stock Market Investing with Exchange Traded Fund. So, in this episode, we are going to discuss how to maximize or increase return with steady dividend. So, as many of you know, dividend is paid out either quarterly or yearly, or in some cases monthly to the stockholder from the stocks or ETF, whichever is the equity. So let's dive into more detailed discussion. So what is dividend? So dividend is a portion of the profit the company make. They will return to the investor at a different scheduled time period. So usually they are paid every quarterly, but some companies they put maybe twice a year or sometimes monthly as well. And dividend amount is not always constant for a certain company. Uh, Many companies there are there who will increase dividend every year, but depending on the business situation, market situation, they may cut it or increase it. So how dividend can be defined? So usually when you evaluate a ETF or stock, you will see a number yield or dividend yield is 5% or 2% or maybe 1.5%, right? So the way you will interpret that is most recent full year dividend. So for an example, a company you buy, they give $1 dividend, and then the current price of that share is going say $20. So that means is 5%. Okay. So whenever you say see a 5% or 2%, you need to multiply the stock price with that one, that number, and then it will give you the amount of dividend you get. So always look at the what is the dollar number of the dividend. Not always the percentage will give you a full picture. For an example, if a stock is trading $100 today, 5% dividend. If the stock price falls to $50, it becomes $10, 10%, right? So always look at what is the amount of dividend paid rather than the percentage. But percentage again will give you an idea on comparison between different ETF or stocks. So before you pick a stock or a ETF for dividend, couple of the things we need to uh, evaluate. First one is dividend yield. So if a stock is giving 5%, another is giving 2%, so probably I will go with the 5% one. But with keeping within that in mind, we need to also consider the expense ratio, right? So in my previous video, I said what is the expense ratio? Basically, it's a part of the stock price you pay as a management fee. Also, we need to see average long-term return, right? So if a stock has a good dividend yield, but if I see its price is falling every year, so in that case, it doesn't make too much sense because I'm getting dividend, but when I go want to sell my stock later, I'm not I'm losing a good amount of money, right? So whenever you look at a stock, you also see if the stock price is rising. So good dividend is good, but the stock price shouldn't fall because that means on the long term we are going to get we are going to lose some money when you try to sell the stock. And always look at the holding inside that ETF. So usually ETF will come with a lot of different companies. So we need to make sure that those companies are quality companies with a solid business foundation. So here today I will show you and compare side by side three of my favorite ETFs, dividend paying ETF. So first one is Vanguard High Dividend Yield ETF, ticker symbol VYM. Um, and then Invesco S&P 500 High Dividend Low Volatility ETF, SPHD. And one good thing about SPHD, they pay you monthly. So if you depend on dividend uh, money for your income, this is a good one because it pays you every month. And the other one is SPDR S&P 500 dividend ETF. So the good thing about all those three ETFs is that they are part of S&P 500. So that means those are very stable, large cap companies with a different dividend yield. But in general, I found they're quite stable in terms of dividend yield and in terms of stock performance. So the way I usually evaluate ETF is my favorite tool is this Vanguard dividend, sorry, ETF comparison tool. So you can just search Vanguard ETF comparison, and then you come over here, check ETF box, and check all the ETF from the drop down list. So now I put all three from Vanguard, Invesco, SPDR, and respective ETF I'm looking, and then I compare side by side. So this will be a very good tool if you like to, if you have 2 or 3 ETF in mind or more than that, how you can compare their performance. So this way I can side by side put Vanguard, Invesco, and SPDR and look what are the differences. So first thing I look at that is expense ratio. So definitely you can see Vanguard has much lower expense ratio of only 0.06. On the other hand, Invesco 0.30 and 0.35. So that means if I buy $10,000 worth of Vanguard this ETF, I will pay $6, but for Invesco I need to pay $30 and SPDR 35. So in this regard, Vanguard is ahead. And this is their last price, change in price. So then I will scroll down and see what are the returns and then yield. So look at the annual return. So average annual return for 10-year period, Vanguard is giving about 11% stock price, SPDR 11%. Invesco actually came later in the market, so they have a 5-year available. So as you can see, they're kind of closer in terms of total market return. And let me see, somewhere there should be a yield information. I saw that earlier, or I'll show you in the next slide. Here we only have Vanguard one is 3.3%, which is pretty good. And here are the holdings into those companies. So as you can see, more or less all three have quite big companies, but I can see Vanguard names are much more, I would say, known to everyday investor compared to SPDR or Invesco. And here are the equity characteristics, more or less. So I can see Vanguard has about 418 stock in that one, so it's pretty diverse, whereas Invesco and SPD are kind of more concentrated. Also, Vanguard has the largest market cap, 102 billion. Price to earning kind of more or less same. Invesco is PE ratio is low, which is good. And earning growth rate. So in terms of earning growth rate, Invesco actually and SPDR are quite high compared to Vanguard year-to-year basis. And here are the different sector, they are diversified. So I can see that Vanguard is high on consumer staple, which is good. All of them actually, because this sector give usually good dividend, and then also financial service companies. Right. So this is a good way to compare side by side. And if you miss some information, just go to that ETF issuer real quick, and then see what are the parameters looks like. So here in this table, I actually made a summary of all of those three with the information. So Vanguard has a yield of 3.44, whereas SPHD 4.89, which is really good. And the good thing I like about SPHD, it gives monthly dividends. So in this yield category, I think it's top performance. So that's why I give it 1 star. Then expense ratio wise, Vanguard is good, so it gets the star. And 5-year average return is kind of same, not much of a difference, but SDY is still looks like good, around 10%. And holding wise, Vanguard is much more diversified compared to these two companies. So I like all of those fund. I have them, and they're really good fund. But if you have to select only one, I will probably go with the Vanguard, looking at the expense ratio and diversification. But then again, a good strategy would be to not only buy one ETF, right? So if I have say $1,000, probably I will buy um, some Vanguard and maybe little less SPST and SDY. So in that way, I am well diversified in my portfolio. Okay, so this is a good way to, I would say, quickly check dividend investment strategy with ETF, and I hope you guys find the information useful. So please let me know if you have any comments or suggestion, and I will end up always with a comment from Mr. Buffett. So risk comes from not knowing what you are doing. So that's why in my video, I always come up with some background indicator check for all the investment strategies. And so that will really help to manage the risk with any investment. So I'll be posting more videos on some of other ETF investment strategies. So keep an eye on that. Thank you so much.